Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance trends in the Nasdaq Volatility Index, or what we call VolQ. And of course, we'll touch on Microsoft and Alphabet earnings. Shawn, it's great to see you as always. Let's take a look at your first couple of charts here. We'll look at Nasdaq 100 levels and of course, trends that you're seeing in VolQ.
Yeah, so the Nasdaq 100 has had a pretty strong breakout, and I'm actually pulled down some of the moving averages that I'm focusing on when you see this side of short-term strength. Just looking at that 10 and 20-day moving average, I think those two are going to be interesting levels to keep an eye on, because when we have been able to break above these 10-day moving averages, we've usually had some pretty good sustained momentum to the upside following a breakout above that 10 days. So I think given the strength of this breakout, it is going to be interesting to see how much of this is sustainable. And then just looking at VolQ, once again, pushing back down to some of those really low levels. We saw a pretty big run up recently around just some concerns, and you saw a pretty big shakeup out of the tech space. I think a lot of that started when we heard from Snapchat's earnings, and they had a pretty big hit due to some changes that Apple had made in terms of tracking across their platforms. But I think right now we're going to refocus on some of the other earnings that we have out now that we're past some of those names that have a lot of exposure to that sort of social ad revenue type of a revenue stream. Going to be interesting to see how the market digests some of the big names that we're going to get out this week.
Right, Shawn, I would agree with you. I know the market traded in sympathy to the upside due to the financial earnings because they were quite good. But I think when we look at tech names, we look at consumer names, and we have to really include the supply chain conversation in there. That could potentially be the next little bout of rockiness that we see. And also, which I think is interesting, Shawn, your next chart here, we're taking a look at the 10-year. And usually we see, an inverse trade here, but really with it ticking higher, so have stocks.
Yeah, and I think one thing that is noteworthy is one, looking at not just where we go, how fast we go there, but then also I think the market started looking at maybe some significant levels for the 10-year to break through. And one of those was that 1.7%. I think when we had a pretty big run up, that might have caused a little bit of concern out of some of the traders and investors out there. But once we moderated below that 1.7% level, and if you look at the spread between the 10-year and the 2-year, that's also moderated and actually come in a little bit. I think for these longer term, more growth type of assets, like some of these big tech names, that may have taken some of that concern out for investors as well. And I think now it puts us in a good place really just to focus in on the earnings that we're going to have coming up here.
Right. And let's take a look at those earnings. We'll start with Microsoft and Google.
Yeah, so looking at Microsoft, that's going to be one where it's going to be a matter of, can they sustain some of the strong momentum they've had? They've had some incredible performance. The company really seemed to be firing on all cylinders. So it really will become a matter of just really what's priced in here. And I'm looking right now for about a $7 move or so from what the options market is pricing in post earnings. $7, the upside or downside, sort of for that range for it to trade in. And I think it's interesting on the downside, that really sets up nicely with a previous resistance level that maybe we can now look to become support around $303. The question always becomes on the upside, what's a reasonable level to look at? Because there really is no precedent here for any sort of resistance levels or anything on the upside. So looking at what the market maker move or what the options market is sort of pricing in here can help guide that. And right now it's pricing in about $317 for the upper bound of that range post earnings.
All right, Shawn, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.